Cathie Wood's ARK Investment Management was seen selling big names such as Facebook, Amazon, and Elon Musk's Tesla Incorporated. ARK Investment has also sold shares of JD.com as the Chinese tech rout continues. So what could be in the pipeline? Cathie Wood talks about never being in a market that's up and has appreciated while the company's strategies are down. So we're going to talk about what to expect for Tesla stock as we approach the end of the year. We'll also talk about why Cathie Wood is surprised and shocked that her fund is actually underperforming significantly compared to the overall stock market and why she's doubling down on her high-conviction stocks like Tesla. Cathie Wood, founder and CEO of ARK Investment Management, offered some insights into her investing strategies, including recent moves with Tesla and Chinese stocks, and predicted what will be the next big thing to shake up markets. The fund manager shot to prominence in 2020 thanks to her blockbuster performance driven by bets on mega growth stocks. Her exchange-traded funds last year have delivered eye-popping returns, with her flagship ETF up more than 150% in 2020. During an appearance at the Milken Institute's 2021 Global Conference in California, Wood offered perspectives on a broad array of topics. Wood is known for her bullish stance on Tesla stock and has never wavered in that regard, even during the electric car maker's early days. While referring to her decision to invest in the company, Woods talks about Tesla's battery technology being unlike any other. Tesla is riding down the cost curve of the consumer electronics industry. She reiterated her $3,000 base case price target for Tesla by 2025, an eye-popping prediction first revealed in March of 2021. Despite her bullish long-term view, she sold some Tesla stock in September. At the Milken conference, Wood noted how EVs have been taking away massive market share from traditional gas-powered vehicles, and Tesla stock is finally responding to that. Back in July, Wood sold top China tech stocks as Beijing ramped up its wide-ranging regulatory clampdown. Then a month later, she bought them again. Wood's flagship ARK Innovation Fund still doesn't hold any China stocks, though the ARK Autonomous Tech and Robotics ETF holds some, such as JD.com. Her stance now is to be very particular on which China stocks to own. Referring to Beijing's Common Prosperity campaign to rein in outsized wealth and profits, Wood said she's targeting very low-margin companies because margin is clearly not appreciated by the government anymore. All of the big names sold by Cathie Wood's ARK Investment have fallen in the range of 3 to 13% recently. On the other hand, more shares of Twitter were bought by ARK Investment, adding to those bought after Parag Agrawal stepped in as CEO. Tesla is the largest holding of ARK Innovation ETF according to the S&P Capital IQ, with more than 2 million shares held. Well, we believe we've pretty much covered Cathie Wood's stance on Tesla stock. So what's next for Tesla stock as we approach the end of the year? Well, Tesla has taken a hit recently. The stock has slid 16% since the beginning of November, even as the S&P 500 rose more than 2% over that same time frame. But despite the stock's bearish trend recently, one analyst thinks the electric car maker's shares will soar over the next 12 months. The analyst's updated price target for the stock calls for an impressive 55% upside. Based on Tesla's share count currently, this implies a $1.6 trillion market capitalization. So why would anyone be so bullish on Tesla stock? New Street analyst and longtime Tesla bull Pierre Ferragu boosted his 12-month price target on Tesla stock from $1,290 to $1,580. Ferragu justifies his price target with a view for record fourth-quarter deliveries, impressive production rates at the company's factory in Shanghai, huge revenue growth next year, and more. Starting with Ferragu's estimates for Tesla's fourth-quarter deliveries, he says that the electric car company's deliveries could come in as high as 280,000 to 285,000 in the fourth quarter. The midpoint of this range would imply 56% year-over-year growth and 17% sequential growth, which is an impressive feat in a supply-constrained environment. This would put total deliveries for the year at 910,000, or about 87% higher than last year. The analyst also thinks that Tesla's total revenue next year can approach $80 billion. This is about $9 billion higher than the current consensus analyst estimate calls for. Notably, Ferragu believes that Tesla is now producing electric vehicles at its factory in China at an annualized rate of more than 700,000, which is well above what Tesla initially said the factory would do. Adding this production to Tesla's factory in Fremont and the company's new factories in Texas and Germany will help sales soar next year. But the riskiest part of this thesis may be Farugu's view on the high valuation he believes Tesla stock will command. Farugu thinks Tesla can trade at 50 to 100 times earnings for the foreseeable future. While the electric car maker definitely deserves to trade at a multiple like this currently, based on the company's strong growth prospects, there's always a chance that growth slows materially in the future. If growth does slow materially over the next 5 years, Tesla's price-to-earnings ratio could fall below Farugu's target range. Pressure on Tesla's share price had been building for some time. Many analysts believe that the stock's valuation is inflated. Even with the recent slump in their price, the company's shares have a trailing price-to-earnings ratio of 307.86. Peers like General Motors Company and Ford Motor Company have P/E ratios of 7.64 and 27.44 respectively, even though they sell more cars. Investors should note that Tesla has a price-to-earnings ratio of over 300 currently, so there's already huge growth priced in from the electric car maker. Of course, analysts agree that earnings are about to soar. On average, analysts believe that Tesla's earnings per share will increase at an average annualized rate of 73% over the next 5 years. And we believe it's very much possible for Tesla to massively increase its earnings. With production set to increase next year as the company's increasing production units, we expect more sales growth from the company. Tesla is expected to start Model Y production at Gigafactory Texas in Austin soon. The new factory is critical to Tesla's expansion plans in the U.S. Currently, Tesla sells every car it can make in the U.S., and it has delivery timelines of close to a year out for some of its most popular vehicles. All Tesla vehicles currently sold in the U.S. are made at its Fremont factory in California, which can produce about 500,000 electric vehicles per year. Gigafactory Texas is expected to more than double this output once it's fully ramped up, but that's a few years away. The automaker is going to start with Model Y, which is Tesla's most popular vehicle, at the new factory. Tesla has been guiding a start of production by the end of the year. With the imminent start of production in the background, there have been talks about the $60 million in incentive that the local government gave Tesla to build the factory in Austin. On Twitter, CEO Elon Musk responded by claiming that Tesla plans to invest as much as $10 billion in the factory over time. Recent filings reveal that Tesla was spending $1 billion on the project, but that's just for the phase of the new factory. Once Tesla deploys Cybertruck and Tesla semi-production at the factory, the investment is expected to expand greatly. Furthermore, the automaker recently officially moved its headquarters to the site, which is expected to expand beyond manufacturing operations over time. So what's next for Tesla? While the stock's fundamentals may have gone askew in equity markets during the pandemic, the company's business became stronger. It established new manufacturing facilities in Austin and Berlin. The Shanghai facility, inaugurated in January 2020, surpassed Fremont, California in manufacturing capacity and became a hub for the export of cars to Europe. The company also made advances in its self-driving experiments and developed new battery chemistry. So we believe Tesla has got what it takes to stay at the top. Let us know what you think via the comments section. Many thanks for tuning in today. Remember to like, share, and subscribe. See you next time.